What's up, traders? Spring is in the air, and pollen is falling down as well as the market today. Last week, I just wasn't feeling the rally, and something in my bones, some kind of spidey sense was telling me that this is I don't know, but it hit a resistance. Both S&P 500 futures and Bitcoin hit major 50% resistances this week, and that is where they held. And so we're not getting a V bottom, and I think the market's slowly digesting that fact. So let's talk about the potential low, the new potential low coming up in just a minute. So hang out past the music. Do, 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 do. All right. I was trying to get this set up on Twitter, but didn't work out quite well. All right. All right. Oh. Pardon me. There we go. Okay. All right. Happy Friday once again. And yeah, I got a lot of stuff that I want to talk to today. Some memes from this week. One of the big questions that was posed to me today, I had a good walk today. It's springtime and really feeling good after getting some exercise today. And I got a walk with a friend who was asking me, what do you think the whales are doing? Do you think that they're manipulating the market? We're talking about Bitcoin, basically. Like, do you think that the whales are out there selling Bitcoin that they bought a decade ago, and that's why it's going down? Because clearly, if Michael Saylor can just buy all the Bitcoin, then there's not going to be anybody to sell. And I tried to answer this the best way I could to people that were, curious about this question. It doesn't. Just imagine this: if it doesn't matter if someone owns 0.001% of the supply and they're never selling. It doesn't matter if it's stock or if it's Bitcoin or something like that, or if they own 95% of it. If they're not selling, then they're not participating in the market. But who is participating in the market are the buyers and the sellers, the people that make up the spread, the people that are setting the bid and the ask. And that's constantly being updated fractions of a second by high-frequency bots and market makers and things like that. And that's what makes up the price, what people are willing to pay based on all the available information, all the liquidity, all the memes, all the things, all the manipulation, both good and bad. That is the price. The price is the price in that moment. And there's nothing else. There's no other truth. There's no high truth, basically. It shouldn't be something else. But one of the consternations that I've heard is, with all this, nation state, all these strategic Bitcoin reserves coming in, which of course, I take a little bit of issue with because, now that they have started, trying to get people to pump their bags. There's a meme I made to this effect earlier. We got into a nice little discussion in one of my Bitcoin Maxi chats, which I went back on my New Year's resolution and rejoined because I think that there needs to be a little bit of, there's going to be questions like that, basically, where, why market go down when everybody's buying, is what Twitter says. But that's just people on Twitter. And last week I talked about that big short whale that got into a very public distributed exchange trade, and there was a bit of brigading about trying to liquidate their short. It was like a $500 million short or something like that. I won't rehash the topic because that was last week's topic. But, what was interesting was people were, all excited that they were buying $20 worth, a few Satoshis worth, et cetera, et cetera. And that's not very much. Buying $20 a month, or excuse me, not $20 a month, but buying $20 worth, buying a few Satoshis, that's just a little bit. So it's either people have run out of money, or they're finally listening to the advice that you shouldn't invest more than you're willing to lose. And so that's been kind of interesting. But, the price is the price. And the price is following a very clear pattern. And, of course, weeks ago when we had this move down, and I'll rehash it, we'll do a little price update here. But, I follow a lot of people I respect on Twitter, some old traders like Peter Brandt and stuff like that. And if you don't follow him on X or whatever, I highly recommend it. He's older gentleman, but he's been in trading futures for longer than I've been alive, and I've been alive for a while. And he focuses on chart patterns, wedges, and things like that, and they're all kind of coming to the same conclusion that wedges are breaking down. I don't use any of that. I just look at 50% retracements, and you know what? They don't happen that often. I think people like to use chart patterns like double tops or head and shoulders and things like that because they happen a little bit more frequently, especially wedges. People love to draw wedges. I've never really found that much use for wedges, but 50% are really the way to go. And the most simple way to draw them out is to just look at a major trend from a swing low to the swing high, and then that's where you're going to find a lot of good trades if you're patient. And just little self-admission right here. I've been a little impatient because I've been feeling this short, not just Bitcoin, but of the entire market. Really, what's influencing that decision has nothing to do with the economics and people's political opinions about what's going on. Has nothing to do with that because I can't control any of that. The only thing I can control is my trading, and I can also look at where we are in terms of this bullish trend. This is the stock market we're looking at right now, the S&P 500. We've had a very bullish trend that's held the Ichimoku cloud for over a year, almost coming up to about 18 months. November, next month it'll be, well, it ended. So let's just call it over a year's worth of bullishness. That finally this thing got bearish. And if we look at this on a weekly, for the first time in all that time, we're actually making a run into the cloud to function as our support. And so as soon as we got below the Kijun in here, the green line, which is the 50% of 26 bars, that really kind of shifts things into a counter trend mode. Doesn't mean that we've gone into a full bearish recession and the stock market is going to go down to whatever the doomers are going to say, but we're probably getting a very healthy pullback. And so that's going to pull us down into this dynamic level support here, the cloud. And even though if we go back to last week and we had this little move up, I think a lot of folks were looking at this as typically what has happened in almost every single move since 2023, where we have almost like a V bottom and just immediately comes and recovers and right back up, BTFD, right back up to make a new all-time high. And so we had a chance at that. We had a really good chance of that here on the S&P 500 futures, or the market, the S&P 500. And well, we came up and just barely on futures. That it looks like it hit that 50%. Again, that's the Kijun, which is the 2650. But just to make sure, double check, that is very, very, very close. We came up to that 50% and just didn't quite hit it. We actually missed it by just like a point, or actually 0.75 of a single futures point. And boom, same thing happened on Bitcoin this week because they're very, very correlated right now. I mean, if we go from basically the start of the leg down, which is really where this trend started in February, to here, we hit a nice little, see, this is why I don't like chart patterns, because that's not really a head and shoulders, but 3 hits of that resistance there at 88, 111. And that held as resistance. So what we have is 50% to a 50%, and that could be the resistance to hold and make another test of this low to break it. I think so. I felt really good in, even though my biggest position right now has been MicroStrategy, and nobody likes their big positions to go against them as it was. Even though this was going against me, I didn't really sweat it that much. I mean, this is a big position, but even though it was coming all the way back up to retest this, kind of 50% support turn resistance, I felt pretty good. What sectors? All right, we'll look at that in a second. By the way, if you have questions or if you have symbols to look at, post them in the chat. I love to talk about this stuff and look at some things. We looked at one thing last week. Don't forget to remind me, Jen, to look at Robinhood and see what it got down to today. But broadly, I've just felt short, and I don't want to say that I just feel the market, because that's a good way to get yourself in trouble. But hitting this resistance, holding it, influenced me getting into a futures short, which I want to recap here because I've had trouble getting my feet under me these last couple of weeks because I was able to catch this move down when Bitcoin was making it, but I've been wanting to kind of get in futures short to play the market going through this pullback, if anything, just a hedge against equities. Once it hit this on, I think, Tuesday, Wednesday of this week, yesterday, Thursday, there was a nice 50% level here at 57.76. Actually, that low got made. I always do the swing low from the high, and so 76 caught that during the day trading hours right there. Took profit here initially to pay for the trade, and then I cut myself short by taking profit on the volume profile. Made sense at the time, to take profit here at no, I didn't even do that. I cut myself really short. Oh my goodness. Yeah, I cut it at 5,700. Ugh. God, that looks horrible, doesn't it? I really cut my man. Let your profits run. I when you get a good runner like that, I still, man, I could have done better on that. Anyway, that's 100 points. So, but I know what I want to do. I know what I want to short. Can't short now, but we're gonna wait for it to come back up. But yeah, let's look at sectors here in a second. I've been hearing some things about Robinhood. They've started into breaching, forays into different businesses like sports betting. I got a notification off my app that I can bet on my favorite sports brackets and things like that. Yeah. If MicroStrategy goes to a very, very high price, will your short position get liquidated? My shorts are based on puts. I have lots of puts. I have puts going out basically every 3 months into 2027. The closest ones that I have now are May 250 puts. And so what I do is because the implied volatility of MicroStrategy is so high, or let's just take a look at it real quick. Down at the bottom here, let me make sure it's coming up on my OBS. Yeah, the bottom right here is implied volatility. And so really as this was going along when we got these lows, implied volatility increased. And so what I was able to do was I was able to sell puts against it, hedging my positions. Basically, I was selling like the 190 and the 160 puts. And so I was able to capture the theta and make sure that I'm not losing too much on that. If it goes up to a high price, my puts will become worthless. And so, no, I'm not sitting here in a position where I'm going to bankrupt myself. My risk is fixed. But what you have to do is you have to make sure that you're not losing money every day on your options. And so to do that, I've been playing the volatility. Now volatility is getting a little low, and so can't quite do that anymore. I was going to have to sit in the puts and wait. But also sell some calls in here too. So that does put me a little bit of risk, but they're way up there, like 500 and stuff like that. I'm not betting against the religion, by the way. In other words, I'm not necessarily betting against Bitcoin, even though I do conclusively say right now that Bitcoin is in a bearish trend, defined by where it is in relation to the Ichimoku cloud. And it started back in February when price got below the cloud, when momentum got out. Those are the characteristics that either make it a bullish trend or a bearish trend. And I do believe that a bearish trend started then, and it has not gotten bullish yet. And I think that I don't know how Saylor is getting all this. Well, I mean, various ways that he's finding ways to get money to buy Bitcoin, and that's what's perplexing a lot of Bitcoin maxis right now. If he's buying all the Bitcoin, who's selling? Who's that evil seller that's making price go down? This is not how it should work. Well, that's just what the market's doing right now. And the simplest explanation, if no one's selling, or if few people are selling, and the price is going down, then fewer people are buying. It's just that simple. The demand's not there. I mean, you got demand from Saylor and MicroStrategy. And, oh, by the way, you finally, great news this week in terms of people following MicroStrategy's example and adding to their corporate balance sheets. Now you can count a company, a major company, a major stock, very popular, very, very well-known company has decided to start raising money to buy Bitcoin and hold it on their balance sheet. That company is GameStop. I don't know if you heard that or not, because frankly, that's a bit of an eye roll. Trying to make that lightning strike twice. I don't know. So, like I said, I do have a big position in MicroStrategy, probably one of the biggest ones I've ever taken in my career. And I'm not betting against the religion, that being Bitcoin. I'm betting against the zealots. When I see all the memes about sell your kidney to buy MicroStrategy, I gotta short that. I just have to. You can't. No, you just don't. You don't get away with that. Those memes come around and nobody wins on those kind of things. You just don't. Like by the time people were like that bullish about something, that's the yeah. So you unstaked your atoms the other weekend, trying to decide if I want to stake in different wallet or close out. What is Adam doing? You know, I thought DeFi was a really cool idea because you could earn yield, but the problem is you need to be the thing that you're earning yield on needs to be increasing in value at a either zero or at a not negative more than you're earning in yield. And yeah, so what's the staking reward on it? It was a great DeFi. I loved DeFi back in 2021, and I love the idea. I love the idea of it. And I remember sitting down with some DeFi experts here in Atlanta. I went to meetup groups because I wanted to learn about it because they were about my age when I got into Bitcoin. They were in like late 20s, that kind of thing. And I remember I just absorbed so much. I learned so much about Bitcoin back in 2010 and got really, really bullish on it then. And then I was trying to do the same with DeFi. And I sat down and I listened to them talk about like stakings and governance tokens and all these other things. It was like listening to somebody talk about, sports statistics like baseball, RBI, and things like that, or like a video games like World of Warcraft, like DPS and hit ratings and stuff like that. Like I was trying to absorb it and I couldn't. I was like, man, maybe I'm too old to learn this DeFi stuff. And then when it all came crashing down, I realized that they were just trying to engineer a better Ponzi. Basically just trying to psychologically manipulate people to never sell and keep that price going up. It was all about engineering the number to go up. And when all the free money or all the cheap money, the low interest rate environment dried up, so did the money going in to make the number go up. So 15%. So is that yearly APR 15%? So in the last year, so March 28th of 2024, it's down 61%, and you're up 15%. So, is it 15% a week or 15% APR, like annual percentage rate? See, I mean, this is just a good idea, but you really got to, call me boring, but I still have a lot sitting in my Wealthfront account getting 4.5%, which, a lot of people would scoff at in the crypto community, but I've been sitting on 4.5% in a bond ladder since I would say just what about what was it like? It's probably about late summer, so July. Let's just say July of last year, and so versus the S&P 500, I'm up on my bonds by 4% instead of being flat as of today. Now, of course, that was better, earlier this week, but that's the nature of the beast. And would I've been better? I would have definitely been better off in, well, let's see, hang on, in Bitcoin from July to here. Yeah, 23%. So yeah, objectively, it would have been better to have put it in Bitcoin, but I've just wanted to sit around and wait for some real opportunity to come about. And we may be getting that real opportunity right now. Real opportunity. Market going to go to zero kind of blood in the streets kind of opportunity. That's what you want. That's what you want. You got. I was telling my friend asking me today. Like, hey, I'm trying to make a decision about this Bitcoin thing, and he's been in Bitcoin almost as long as me. And so I said, dude, you have all the information that you need to know about what to do right now. I mean, you've seen these cycles. You've seen the cycles of Bitcoin, and the personality of what people are saying. He said, "Oh, I could have bought it $50." Yeah, same here. Like back in 2013, and these were small forums. I mean, no one really was talking about it back in 2013. I went to South by Southwest to try to find a panel on Bitcoin, and in 2013. The summer, and nobody was even talking about it back then. Very small meetup communities. But, invariably, they all kind of have the same, pattern where people get really excited about it and they think it's going to go to $1 million, and then it goes down and people think that it's going to go to zero. And so you got to ask yourself, in the spectrum, in the cycle of people online or in communities saying Bitcoin is going to go to $1 million, being what it typically does, people say at a high. In other words, not necessarily the best time to buy it, versus Bitcoin is going to go to zero, which has historically been the best time to buy when people are very bearish about it. They've given up all hope and bad things are happening. So on that spectrum of Bitcoin's going to go to $1 million or Bitcoin's going to go to zero, what is the sentiment right now? And then, is that historically a good time to buy or not buy? And so if you've been following it for over a decade or even just past couple of cycles, you can answer that question for yourself. Which one are we closer to? So I'm just going to leave that open-ended. You guys know what I think. But it's not a good like, share, subscribed opinion, unfortunately. People want to be told that all their dreams are going to come true. And look, you're getting diminishing returns. So your bond ladder on Ally is definitely doing better off than what I have staked. Yeah, look, that's the other thing about crypto. Everybody's been saying for years, crypto is going to replace all this boomer, DeFi. But look, it's just this generational conflict. It's young people looking at old people having all the money but no energy and thinking that they're going to come up with something new and better and they're going to replace the old guard. And the old guard just kind of sits back and is like, There's that saying or story of the two bulls at the top of the hill, and there's an old bull and a young bull, and young bull says, "Hey," to the old bull, "Hey, how about we run down there and we bang one of those cows?" And the old bull says, "How about we walk down there slowly and bang them all?" And it's that kind of difference in energy. And I remember my boss back when I worked in IT told me that story. Turns out it came from Sopranos, actually. So not my wisdom. Anyway, if you guys we're getting into the last half of it. If you got symbols to look at, let's take a look. Because I just wanted to kind of talk about the trade I was feeling good about this week, finally hitting the short right. Maybe speak about how I felt right here at the middle of the week. I actually bought another put. It hurts because you're like, oh, when we were down here on the 10th of March, that was a big day for my puts. And then all the way to come back here, almost to like a break even. I'd have to do the calculations based on my selling. But then to actually just sit there and go like, all right, yeah. Myth one. Did you tell AI to make that? So yeah, but I didn't worry about it too much because Bitcoin is still in a bearish trend. I still think that what Saylor is doing is historically going to be looked back on as one of the great financial follies of our time. It makes too much sense, and people are too cultish and bag-holdy about it. And it's just going to end in disaster and be a great documentary one day. But we got to sit here and wonder, am I going to be right? Or is he going to be right? We'll see. Thanks, ChatGPT. All right, so let's look at Robinhood. I don't know why I'm so bearish on... I'm not bearish on Hood. I can't bring myself to get... Oh, look at that. So this we drew up last week. I think Jen had me look this up. And I basically said, look, this is the trade. And did it trigger off that line? What's the low here? Hang on. Let me draw this up. So I'm looking, of course, just like in the Bitcoin and the S&P 500 futures, the 50%. And it kind of breached it here back in the beginning of March, boop, down to here. But that actually sets up a low where your stop needs to be. And if we go here, oh, look at that. We didn't quite get to that 50% today. It's about 45 to be exact. And so maybe if we get a little more down pressure on the market, we're going to get filled on that entry. But as I said, I've said that all year when people ask me, I just don't want tech this year. I know that puts me in a really weird social media position because everybody wants to be long tech. But just for instance, I'm still short NVIDIA with puts. I have a put going out to January of next year that I was able to. I first took a put that expired in March, made profit on that when it came down here before expiration. I think I closed that out when it got down to either one of these days in here, because expiration already passed and it went up to expiration. So that's why you got to close your options about within 15 days of expiration. Your best day in the option where you're happiest about it, that's probably going to be the best one to close it. Now it's come back, and so that long-term put is doing pretty well. So what I probably want to do is sell another put against it. But again, I just NVIDIA is the leader. All this bearishness that's in the market is coming from money flowing out of these magnificent seven. Your big tech flyers like your NVIDIA, your Google. What's Amazon doing? I mean, still have a lot of Amazon. It's coming back. I mean, it's all kind of flowing out of tech right now. So the sector rotation that I've noticed for all this year, it kind of has abated a little bit. My picks are still Dollar General, Kroger, Hershey's, Mondelez, whatever it is. And, those have been my big stock plays. And MMC, a little bit smaller position, but this is a materials company, which is actually, okay, fine. There you go, materials. So these right here you see are the players. I kind of already own Palantir from a very low price. That's why it's on my watch list. But MMC, DG, Kroger, Hershey's, Mondelez, these are all ones that I took in the first quarter, January to February, and they are materials and consumer staples. And while Hershey's, which was doing probably the best, has come back a little bit, it's not back to my entry at the 140s. Dollar General is starting to trend up. No matter what this market does, it's still entered a new bullish trend off a multi-year low. Let's look at the sector rotation real quick and see what it is. Because, everybody wants to get into tech because they think that this is just this pullback, this opportunity. And I don't blame you for thinking that, because you've been watching it for years go up and up and up. You're like, oh, now's my chance. But sector rotations take a little bit longer. And tech is just one of these things, like NVIDIA in particular. I keep going back to it. It just a few years ago in 2021, less than half a decade ago, 4 years ago, NVIDIA, as great as it is, had a 68% pullback from its all-time high. So, and then where would 68% put it now? Oof, about 50. So you could lose another 50% on it. I don't know if it's going to go back that much. I mean, where I would look for it to go would be the 50% maybe of this trend. So we're maybe about 81, but I don't get interested until 81. And the same goes, I think a lot of people have been trying to get into AMD as sort of a catch-up trade. I've got it annotated already where, I basically, when you see me do the squiggle line on my charts, it means in past live streams, people have brought this up. And I've said, well, your 140 is your support, but it's losing it, and it's continuing to lose it. I mean, you're fighting this volume profile level right here, but, you're in the value of risk on that. Tech, I'm just not interested in this year. Next year, when nobody wants to buy it, I might. Well, we got to talk about gold, don't we? Jeez, look at that. I made a post about gold earlier. Let me bring up the sector rotation really quick. Hang on. I still think the sector rotation is going to be the same. I still think that if we are here, here's the model. Let's blow it up. Let's do a quick recap. So starting from the left, just focus on the orange line. This is market. Blue is market cycle, but let's focus on the orange. So market bottom. At the market bottom, what leads you out of the bottom is tech and discretionary luxury goods, like your Lululemons and things like that. Things that people buy when they got a lot of money. Technology, because it's riskier, it's higher return, has gone down a lot. And so those are the things that lead you out of a market bottom. Then you have communication services like your AT&T, your Verizons, industrials. And then at the top of the market, what leads is materials, energy, and consumer staples. And as the market starts to roll over, as we can kind of see it's doing, rolling over into a bearish trend, then your consumer staples and your healthcare should begin to lead. Also, utilities, safer dividend-paying typical stuff, so that people can hide out the market going down. And that's why you see still on a day like today, SPY versus SPHD. So these are the two things that I kind of look at to kind of look against each other. SPY being the market as a whole, and SPHD being the low volatility, high dividend ETF. In other words, your more blue chip. Well, they're all blue chips if they're an SP, but you're more or less volatile. In other words, they don't move as much. You're not going to have tech in here because they don't pay dividends, but you're safer stocks. And so market broadly down 2%, safer stuff only down 1.4%. And so when we had this, recovery these last 2 weeks in the market, a lot of tech started doing better. A lot of my value plays, I don't want to call it value, the consumer staple plays, some people call it value, they started doing poorly. But now we're back to that model, and that's the cyclical. And so if we do see more down move, the reason I kind of feel comfortable with the market going down, I think, is because I'm already positioned there with these consumer staples, which are going up when the market's going down right now. So it's not a market crash. Like, we're not going into this, this situation where everything's going to go to crap. It's just you're seeing money flowing from one sector to another. So let's look at the last couple. So still, we have the same play in the last 20 days where industrials, material, energy, staples, healthcare are leading, technology's done. And so you're seeing this middle of the curve right here, which is basically what you're seeing in the market top. Last 10 days, last 2 weeks of trading, energy still leading, staples, not quite healthcare. A little more nebulous here, but technology starting to underperform. So we're still seeing that kind of thing a little bit. Still seeing. Actually, let's do the last week and see. Yeah. So what does that imply? What will be the next thing that I'm looking for in in the sector rotation model? I would be looking at healthcare and utilities. I'll tell you one utility company that I kind of like as a revenge trade. They're horrible. Don't do revenge trades. Is Southern Company, mainly because I have Georgia Power and they can apparently charge whatever the hell they want because they're over budget on a nuclear power plant that they built. Problem is a lot of the good juice is squeezed by the prices on these. Let's see what the dividend yield on this is. This is just one example. I haven't really done tremendous looking into like Southern Company in particular, but this is a dividend yield of 3.2% at this price. 3%. Who cares? What about United Healthcare? 1.63%. Yeah, crappy returns that you really just have to kind of get your money out of the stock price appreciation, but still, those things could begin to appreciate or hold their ground if the market does continue into a bearish cycle. Market's turning over. I still think that consumer staples are the place to be. This is what I want. Let's do daily here. So these are what I want because, since January, let's do year to date. So info line, and of course, past results, blah, 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 blah. But year to date, 13% up on candy company, Mondelez, Hershey's, another chocolate company. They just sell chocolate. I picked this up in February, but let's just do year to date to be consistent. And so it's up 60.3. Kroger, which is groceries, is up almost 10%. Dollar General, since year to date, is up 14%. So you're seeing about double-digit percent up on consumer staple stuff. Materials, This was one of my earliest trades. I think I might have done this in December. No, yeah, because back here in December, middle of December. But year to date, materials up 14%. So double-digit percents on materials and consumer staples. Whereas, just look at the QQQ, the tech-dominated stuff. Year to date on the NASDAQ is down almost double-digit. So it's a sector rotation. And if we're looking at the same thing, doing to what I would call a Nichimoku cloud pullback. I mean, it's this day to day kind of solidifies it that we're not going to have a V-shaped bottom on this pullback. And yeah, so we're going to pull back into the cloud. I mean, just throwing it out there, looking towards the 1800 of the NASDAQ futures in terms of QQQ. That means we're probably going to get somewhere into the 440 SPY range. We're going to get to about the 520, somewhere in this zone right here. As time goes along, we're going to start pulling back. Pullbacks are usually a little bit faster than up moves, but we've already basically beaten this 50% right here. Let's look at VIX. Yeah, we do need to look at VIX. VIX has been kind of tricky to me, honestly. So, yeah, we'll look at DMP in a second, Jeremiah. So, Duke Energy, yeah, while we're talking about utilities. Yeah, Duke looks pretty good, and the so dividend yield on that is 3.55%. So, yeah, they're pretty much all going to be standard. You're looking at about 3.5%. And so that's where I'm going to be looking next. Boring stuff. And then in about 6 months to a year, when everybody is giving up on tech stocks and nobody wants to buy tech stocks anymore, I will start buying them. And then they'll go up because everyone thought they were going down. Meanwhile, I'm going to keep my capital in boring ass stuff that's going up slowly instead of going up quickly. Get rich slow. Get rich slow. It sucks. All right, let's see. DNP. What is DNP? DNP, is this the Select Income Fund, Jeremiah? Or is it something else? Dai Nippon Printing. Is this a REIT? Let me know. What's my view on VIX? VIX has been kind of tricky for me because I really wanted. Is it the income fund? So let me get back to that real quick. So yeah, well, I'll give it. So DNP. I don't like to try to trade ETFs and REITs based on price action because they're made up of a lot of a lot of parts, right? So with the ETF, you have a lot of individual stocks in there, and I just find that individual tickers, individual assets, individual entities will follow price action patterns a lot better because you got to remember the whole thing we're trying to study here with price action is the psychology of the market participants, and they tend to like to bounce off of 50% levels. They tend to trend once they break over into from a bullish trend into a bearish trend, which takes time and price movement. And then they also like to come and aggregate themselves around places where there was a lot of volume traded. And that's where the volume profile comes in that I like to use to kind of use in conjunction with those levels. And so, hold on. So yeah, basically this futures trade from yesterday was predicated on the 50% matching up with this volume profile zone right here. And so, that was the swing low. Yeah, this was a trade I had to take. And so individual entities really respect these things. But then when I start to look at, let's just say like one you didn't ask for, is like MORT, which is a is a mortgage REIT that I'm familiar with. I did own it, but I got kind of bored with it because it wasn't doing well. It's kind of a staking sort of situation. These don't really tend to follow those kind of patterns as much, and you also have kind of very spiky volume like here. See, notice how I didn't get a very useful volume chart here, and this is a daily, because they're not traded that much. And so the typical tools that I use to try to trade, with price action patterns and things like that, it's just, see, you don't see any trends here. There's just other things going on. And so I don't really have an opinion about like REITs and ETFs and things like that. You got to dig into it and figure that out. So my answer is I don't have an opinion. So VIX. Yeah, I mean, I would rather look at individual instruments and then look for patterns within them, and that's what works for me. So, all right. So VIX. I have been looking, or I was looking in this whole down move for us to get to, or VIX to get to, a hit of 39.22, because when VIX hits 50% levels, even small 50% levels like right here, lag out. Oh, I got completely disconnected. Okay. Looks like I'm good. I got green now. I noticed that things started moving. Okay, I'm back. So, I'm just going to stick with what I know. If we get a hit of 39.22 on a big bearish day where everybody's scared, that's the time to buy. So I'm not going to try to I'm not going to try to come up with new ways to trade the VIX. No. And so that being said, if we get an intra time from this high to this low hit of 23.20. All right, let's see. Are we back? Are we back? Nope. I think I'm here now. Yeah. That was whoops. Okay. All right, we're back. All right. I think we'll be good for a while. I think I fixed the problem connection-wise. So, so basically just to recap, I'm not going to try to overthink the VIX too much. If we get a hit of 23.27 next week, which we probably will, I'll maybe start to look at taking a look at some futures, not be married to any particular direction. We will see that. All right, so question on as Bitcoin loses 0.5 fib, what level would make you interesting, or what would be look? Well, that's a good question. Hard question. Try to learn what to look for. That is the hard question. And Bitcoin has gone in the halvening cycles. And one of the, let me bring it up here. So all layouts. I had a long-term Bitcoin logarithmic projection. I think it's the number 2. Yeah. And so logarithmic projections, I'm not a big fan of them because, they get kind of wonky and everything. But let's see if I can make this work. So what you need something that draws like a nice little curved line up, because I can't quite get them up. But let's just do this. So essentially, what I was thinking that we would top out, and this is kind of shared by a lot of people, is that we would see a high of Bitcoin, given the way that Bitcoin has kind of progressed over the ages, of about 140, 150, depending on the timing. But it's very possible that we saw the high here. And at that point, we look at a big bearish 2-year possible trend. That's what you kind of have to look at as the potential downside. I know a lot of people on social media say there's no downside, but I mean, if you just go back and look at the last 10 years, it has a very cyclical pattern. And people love to talk about the highs of the cyclicals, but what about the down moves? I mean, those are the real opportunities. But everybody's afraid to miss it, so they don't want to talk about it. But what has been the case, actually, let's just kind of recap it a little bit to look for, to get a little gauge. Let's look at our worst case. What are the cycle drawdowns of Bitcoin within the halvening cycles? Keep it short. So 85% minus 83% minus 77%. So what you can kind of say is that it's probably not going to be 85%. It's probably not going to be 77%. It's going to be less. I mean, the drawdowns are getting less and less. The volatility of Bitcoin is actually going down, which means you're getting lower highs and higher lows, but you're getting less bigly moves, okay? And so let's just say that conservatively we get a minus 70% from the all-time high. So what would that number be? We're just assuming that the high's been made. It could go up. This could be, it's basically a 50-50 right now. Is this going to be a 2021 scenario where this, again, 50%, we came back to a 50% level back in May of 2021, held it, went and made a marginally higher high. Could be that. Back in 2017, we kind of came up and kind of bounced around the 50%, but it just went straight down for almost a year. And so it's 50-50. Are we going to hold here and make a slightly higher all-time high, possible, or is this going to be the start of the big, deep pullback? We're going to wait and see. It's a 50-50 shot. But really, like I said, people are only really kind of projecting it out to like 140, 150. There are some very bullish people that say a million out there, but let's just say that. So I mean, right now you're at kind of like a 50-50 shot of if it's going to give you a 100% return or if we have a 70% pullback. Remember, that's the conservative one. Then we have about a 62%. So you're either going to double your money or you're going to cut it in half at this point. That's the bar. That's the trade. Actually, you're going to more than cut it in half. That's the trade right now in Bitcoin. You're going to double it or you're going to cut it in half. Just looking at history, looking at the numbers, just being objective about it, taking all the hype out of it. That's the trade. That's the risk-reward trade. But technically, if we say that the bull trend started as it did in November of 2022 at that low up to the high, that 50% is 62, which I think a lot of people are starting to kind of throw that number out there because there's a lot of volume in there. Of course, if we look at the volume profile for that, then, let's take off that. Then we're probably going to come up with some levels here based on volume profile. We're going to use the biggest bulges, 67. But probably the one that matches up is 63. So let's call it 62.5. Honestly, you got to play that long. That's a have to play because it's a 50% and a volume profile. 63, you got to play that. You got to play that. That you have to take some kind of a long position off that just to give it a try. But then, of course, as you see down here, that is where most of the volume of trading went. That was around the ETF. And so if you give up 63, then you start looking at basically coming back to the ETF launch. And that's almost one of those, it's so ironic that it almost has to happen sort of things, where everyone bought into the ETF and got really long, just like they got long Trump's election because they thought he was going to be the crypto president, which he did some stuff and now he's pretty much done. They're still trying to work out how they're going to buy Bitcoin with taxpayer money. Haven't figured it out yet. That's what people are kind of flustered about. It's like, I thought that we were going to get all this strategic reserves, these bailouts of my bags and anyway. So those are really the two big levels, 63 and 42. I really think 63 is a really cool level, actually. And if it does hold here and then go up, what's the risk reward on that? Again, we're kind of looking at 140, which what people want. That's 127%. So that's better. A little more than double, but it's better. But yeah, I mean, nobody gets into this. The problem is nobody gets into Bitcoin and crypto to make double their money. You're looking for a 10 bagger at least, right? Because of the risk, and also because that's kind of the culture. But nobody thinks about the risk or the downside. There is no downside. The only downside's owning dollars. Worthless money. Tell you what, if you think your dollars are worthless, put them in a trash bag and set them outside my door. I will take care of them for you. I will dispose of them properly. If you think your U.S. dollars are worthless, just put them in a trash bag. I'll take care of it. 60th level would knock out people from MicroStrategy. Well, I don't know. I don't know. I don't know what's going to be the pin that pops MicroStrategy, if there is that, because they've assured us that they'll never have to sell their Bitcoin. Their convertible bonds don't mature until 2027, which is kind of smart, because technically, if you think about the Bitcoin cycles, even if we are now in a cycle, then the cycle only lasts for about a year. And so that'll be 2026. And then hopefully by 2027, Bitcoin will be back on the upswing. And then those convertible bonds can convert into shares at a pretty good price. And so people can be, like, you're okay. So the 2027 year, as most of those convertible bonds are set up for, is okay. It's smart. It's smart timing wise. It means that somebody understands the cycle. The problem, though, is I wonder to what extent the whole house of cards is based upon them being able to generate more cash. Because you got to remember, he's released 2 new tickers, STRK, which is a dividend pays an 8% dividend. Where does that money come from? It comes from selling MicroStrategy shares. And so if MicroStrategy shares don't sell for much, or if people aren't buying them, then you still are obligated to pay this dividend. And so now you got to sell shares for it. This was an 8%. This month, after this was announced, because this came out in February, he just announced a 10% dividend. Obviously, people weren't buying the 8%, so he's going to offer people a 10%. Next month, April, he'll offer a 12%. We're just throwing stuff against the wall here to try to get people to give us money to buy Bitcoin, essentially. That's what it looks like to me. The complexity of it, I think, has bewildered people into thinking that, like, oh my God, I can't understand this. He must be so smart. Go back and look at a little bit of history of MicroStrategy of 2000. I've said it before on the live stream. We're getting towards the end here, and I want to leave you with some homework. Go and look at MicroStrategy's history. Go back and look at some of the press releases, if you can find them, from this era right here. There's a whole price system. It's all back there. It's all on the internet. So, yeah. We shall see. We shall see. Still holding this support, though. But the big support. So the levels are, just to kind of recap, 70. Come here. Give me the high. Give me the high. 79, 285. Once again, it's already held it twice. Will it hold it a third time? It's going for it. 62 and 62.5 and 42.5. Those are your levels. And of course, we'll see if we get it back up here, but who knows? All right. Thanks for hanging out. I hope this has been useful. If it was, make sure you give it a like. And I will be back again next week, and we will see if we have indeed made new lows. So trade wisely, and we'll see you then. Bye-bye.